Hello dear all, hope you are all fine. In this video, let me teach you the chapter cash flow statement. Before getting into the chapter let us recall the objectives of financial statement, that is, trading and profit and loss account. It is to find out the operating result of an enterprise over a period of time. Now the balance sheet. It is to find out the financial position of an enterprise as on a particular date. Whereas cash flow statement. Here the objective of this statement is to show the inflows and outflow of cash and cash equivalents of an enterprise during a particular accounting year. Why do we have to recall the financial statement? Because according to Accounting Standard 3, it is mandatory for all the listed companies to prepare and present the cash flow statement along with the other financial statements. That means the earlier two we have seen, trading profit and loss account and balance sheet, plus this cash flow should also be prepared and presented at the end of every accounting year. Now, let us see the detailed explanation and meaning of cash flow statement. As we have seen in the objective itself earlier, cash flow statement shows the inflow and outflow of not only cash and cash equivalents during the particular period, and the report that is in accounting year. Now, two important points you have to see here in meaning itself. That means the cash flow statement, it is also called as CFS. Here, it is prepared based on cash system and not on accrual system. Let us recall the two systems which we have learned earlier. Cash system and accrual system or mercantile basis, cash basis, mercantile basis. This is what we have studied earlier, right? So, trading profit and loss account and balance sheets were prepared on accrual basis. To recall the meaning of accrual basis once again, that means outstanding, due but not paid, prepaid, pre-received and all those items were taken into consideration. Now here in this cash flow statement, only cash basis, that means the actual cash coming inside and actual cash going out are all taken. This is the first point. Now the second point here states that non-cash items like depreciation, writing off goodwill are not taken into account. You would have seen and you might remember in trading profit and loss account debit side, profit and loss account debit side, you have got an entry like depreciation is being debited, and if at all the goodwill is to be written off, it is debited. So these are called non-cash items. These non-cash items were found in the profit and loss account, whereas these items are not at all found in cash flow statement. So these two are the very important points at the beginning you need to remember. Now, now for easy understanding, let us take the cash flow statement with the main head of accounts, the format of cash flow statement with the main head of accounts. We start with the cash and cash equivalent value at the beginning of the year, and we continue with the various activities. We may have to either add or subtract each and every activity. See, the total activities of the enterprise are categorized under any of these three headings. What are they? Operating activity, investing activity, financing activity. Out of the various activity, there could be some operating inflow, cash inflow, and operating activity, cash outflow. The net effect is written here. There could be out of the various investing activity, inflow and outflow, net effect is written here. Financing activity, there could be some inflow and outflow, the net effect is written here. On the whole, the net effect of all the three put together, that means it is written as net increase or decrease on the whole of the three is taken and added or subtracted from the opening cash balance. Thereby, you arrive at the cash and cash equivalent value at the end of the accounting year. Okay, my dear children, hope you would have got the very purpose of the cash flow statement. Now, let us understand some terminologies used in this chapter. Cash and cash equivalents. Okay, so far in the earlier topics we have seen only opening cash balance, opening bank balance, closing cash balance, closing bank balance, like that alone we have seen. Now in this chapter we have got cash and cash equivalent. What do we mean by that? Cash, the hard cash, and bank balance. cash equivalent. These are the short-term and highly liquid investments which can be converted into cash within a matter of 3 months period of time. That's most important. And at the same time, you have got current investments and marketable securities. Current investments, unless specified otherwise, are taken as marketable securities. Okay, here we have got some examples. Treasury bills, commercial papers, preference shares purchased, redeemable can be within 3 months, or all can be taken as current investments, altogether put under cash and cash equivalents. Now, operating activities. This is a very important terminology used in this chapter. These are the principal revenue producing activity. See, we need to understand the basic purpose, objective of starting this organization. What is the aim of starting this enterprise? Like, maybe to run the shop, medical shop. So, in the case of medical shop, selling medicine and earning. That is the principal revenue generating activity. In the clothes, textile shop, okay, selling clothes and getting money. Like that, every organization has got principal revenue producing activity. So all the activities relating to the main objective of the business is classified under operating activity. Okay, so based upon this, we have got, and we need to classify the organization into two basically, because is that financing company or non-financing company. Let us get into the non-financing company, maybe the manufacturing one or the trading one. In the case of manufacturing company, for example, computer manufacturing company, what could be the operating cash flow? Any amount spent on manufacturing and selling of computers is all the cash flow for operating cash flow for computer manufacturing company. If the organization is a trading company, once again, buying and selling of goods alone, yes, purchase and sale of goods, all the related activities and cash flow related to these activity are all principal revenue generating activity of this business. At the same time, finance company, let us see the difference and why should we give that much importance between finance company and non-financing company, because operating activity of one could be different in the other. Let us see that in detail later. Investing activity. So these are the acquisition and disposal of long-term assets and others investments not included in cash equivalents. Okay, any cash inflow and outflow resulting in the acquisition and disposal, அதாவது to buy and sell the assets, if there is a cash flow, that is taken as investing activity cash flow. Financing activity, these are the activities that result in change in size and composition of owner's capital. Ultimately, all the activities relating to capital and other liability items are considered as financing activity. In general, let us take it like, all the trading profit and loss account items, almost all, directly can be taken as operating activity. See, in the case of trading profit and loss account, actually, in fact, we have included certain non-cash and non-operating item, right? Those things we are going to exclude and include anyway. The main purpose is that trading and P&L account items can be generally classified under as operating activity items. Whereas investing activity, in general, for easy understanding, all the balance sheet asset side items could be classified under investing activity, where the company had invested, maybe for buying long-term assets or long-term investments or something like that. The cash has gone out mainly on that. And financing activities are mainly related to capital and other long-term liabilities. Okay. Objectives of cash flow statement, as we have seen earlier, it is to provide the information about the cash flow and outflow of an enterprise during an accounting year. Okay, this we have seen earlier. Now, to indicate the historical changes in the cash and cash equivalent by classifying or due to any of these three activities, the historical changes due to the data if there is a change in the opening cash balance and closing cash balance, and justifying that is the objective of cash flow statement. Advantages and disadvantages. It is helpful to assess the short-term solvency and liquidity position, whereas the same is also useful for short-term planning. So this particular cash flow statement is very much important for the short-term planning. Whether do we have sufficient cash to face the short-term requirement. Okay, so it is helpful for that. And at the same time, any action taken to improve the financial statement for the just appearance, so that's called window dressing. So this window dressing is a major drawback, because of which we could not arrive at the actual accurate cash flow statement. So that is considered as a limitation of cash flow statement. At the same time, under cash flow statement, we don't consider non-cash transactions. So this is also the major important limitation. Okay. With the help of this classification, we can understand in detail of the operating activity related items exclusively to differentiate finance company and non-finance company, because my dear, the operating activity of one company could be non-operating activity of another. See here, for example, in general, non-financial company cash inflow and non-financial company cash outflow. Generally, we can say, okay, any trading organization, yeah, cash inflow due to sales, and cash received from trade receivable, that is debtors and bills receivable, royalty received, fee received, commission received, all these could be considered as the cash inflow, operating cash inflow of non-financial company. At the same time, what are the easily understandable examples of cash outflow for the non-financial companies? Operating activity, non-financial company cash outflow is, like any cash, paid out, cash outflow for purchasing of goods, payment to the trade payable, that is bills payable and creditors, and here payment of operating expenses in general, it is written here. So salary, wages, rent, telephone bill paid, electricity bill paid, and all these things are considered here as operating activity outflow in general. Income tax payment is obviously a cash outflow. At the same time, here we have got tax refund. If at all excess tax amount is paid in a particular accounting year, in the subsequent year we would get the refund of tax paid in the earlier year. So that income tax refund is considered as the cash inflow, operating cash inflow. Okay, it is in general. Now, my dear, let us see how the same would differ in the case of financial company. Financial company in general, we can take it as, for example, easy understanding, chit funds or any other finance companies. There, the activity could be different from non-financial activity, because here these companies are dealing directly in money. So any investments received, so those are the main inflow of these financial companies. So that will differ very much. So we need to understand, we need to be very clear at the beginning of finding out the sum itself, looking at the sum, we need to confirm whether it is a financial company or non-financial company, because it's very important, it will differ. Receipts of interest and dividend is the operating activity inflow in the case of financial company. Whereas in the case of non-financial company, this cannot be considered as a operating. It's only a non-operating inflow. Okay. So here we have invested outside, and from there we are getting interest. This is operating activity cash inflow in the case of financial company. Proceeds from sale of security, because the prime nature itself is to deal with financial instrument. If we get any sale proceeds and get any cash inflow due to the sale of security, that is the cash inflow of operating cash inflow of financial company. Okay. Cash outflow of financial companies here, payment for interest. So here itself, once again, the prime interest, the prime objective is to deal with money. So interest payment is considered as cash outflow, operating cash outflow. These are all various. Okay. In general, we have got income tax paid is normally shown as a net amount, net tax paid. That means, considering the tax paid and less refund, the net amount is taken as the payment. So not to worry about that. Investing activity. Here, as I said earlier, all the balance sheet asset side item in general can be taken here. Cash inflow. What are the examples for cash inflow of investing activity? Proceeds from sale of fixed assets, sale of old assets. Okay, proceeds from sale of investments other than marketable securities here. Okay, interest received. This is for non-finance companies. Okay, dividend received, rent received from property held in investment, held as investment. Okay, all these are the examples of cash inflow. Okay, cash outflow, purchase of fixed assets, any amount spent, any cash going out for purchase of fixed assets, purchase of investments, income tax payment relating to investing activity. Okay, so this is to be taken carefully. And financing activity relating to capital and other liability, cash inflow. What could be the example for financing activity cash inflow? Issue of share, maybe preference share or equity share, whatever it is. Any amount received by way of issuing debentures, proceeds from long-term borrowings, and all these things, as you know, liability side items in general. Okay, creation of new liability. Any cash inflow due to the creation of new liability could be considered as cash inflow under financing activity. Cash outflow under financing activity, payment of loans, repayment of loans, okay, payment for redemption of preference share and buyback of equity shares, payment of dividend, payment of interest. For all these reasons, if the cash is going out, that becomes financing activity cash outflow. Okay, now to have a test in your understanding, let us get into this illustration. This illustration has got 20 activities. Each and every activity ought to be classified either under operating activity cash flow or investing activity cash flow, financing activity cash flow, like that. Okay, if I take the first example, cash sales, it is colored green. Obviously, you can say it is an operating activity. At the same time, you shall try it out now itself. Operating activity, okay, just because of selling, cash comes in. So operating cash inflow. So you shall practice like that. So second one, cash purchase. Cash purchase, obviously operating activity, okay. By purchasing, cash goes out. So operating cash activity outflow, like that. Rent paid. Paid means payment, cash outflow. So rent paid is a operating activity cash outflow. Like that, you need to practice and say it out, tell it out louder so you can have a complete thorough practice. For your easy understanding and identification, each and every activity is colored accordingly. Practice very well and be thorough with each and every item. Yeah, there is also another illustration. This is taken from the NCERT book from Test Your Understanding. Yeah, as you know, here you have got 33 activities, list of activities. Each and every activity is also indicated with different colors accordingly. Investing activity, financing activity, operating activity, okay. Here also, I would like you to classify under investing activity, purchase of machinery means investing activity cash outflow. So have a thorough understanding and practice. This will help you to solve the problem easily. Yeah, practice very well. Practice makes perfect. All the best. Do well.